What do you think of this move?
Thanks
Was it overdue, hasty, the right one? What?
Yeah, well, it's clear that the CEO had lost the confidence of the board of directors and investors. He wasn't given much time to really turn around the company. 1 year is not really enough time for a company the size of GE. And while Mr. Culp is coming in now with fresh eyes, like you said earlier, an outsider that has fresh ideas and has a great track record, he still is sitting on a GE that has the same problems that it had yesterday.
How much of the dirty work has been done by Mr. Flannery?
Well, that's the question that we don't know. I mean, we've had a number of one-time charges. We have the $23 billion goodwill write-down today. We have a $15 billion accounting write-down last year. So if all the bathwater is out, all the bad stuff is out, then yeah, Mr. Culp can come in with fresh eyes. Expectations have been reset because now we know that GE is probably going to miss earnings guidance for the third quarter and for the year. Cash flow is weaker than expected. All that stuff's out in the open now. So he gets to come in with that reset. So that gives him a chance to have a little bit of time to get investors excited.
Jim, this news just came out this morning, and I've heard you use the word if a lot. I know there's still a lot of things that we don't know, but are you convinced that a change like this is what was needed? Could it move you to change your outlook? You have a hold rating on the stock. I mean, investors are certainly, I guess, maybe excited about the hope of something new based on the direction of the stock today.
Yeah, if you're buying the stock today, you're buying hope. Exactly that. GE has been overpromising and undelivering for quite some time. There's been write-off after write-off after write-off. And what I need to see, and we need to see here at CFRA, is the company to hit some financial targets, to start executing, to make visibility new again at GE, where we can trust that what they say is what's going to happen. And frankly, it's going to take a little time.
You know, Jim, I know that a lot of investors like yourself have said that Mr. Culp has culpability, but is he worth a couple $1 billion in market cap like we are adding today? Or is it short coverage?
Well, if you look at the exceptional job that he did at Danaher, where he, like you said, five-fold increase in the market cap of the company, great track record of building businesses that made sense. This is a different story because we have a GE that's a turnaround story. Over at Danaher, he was building parts that all fit together and made sense. GE is a bunch of parts that maybe don't fit together so well. But he does deserve the benefit of the doubt on day one.
How long is this turnaround likely to take? In other words, is it too early to buy the stock, expecting that maybe in 5 years it would double? What do you think?
Well, under Mr. Flannery, I was saying more than a year, and he wasn't given a year. So, certainly it's going to take some more time to identify a strategic direction. He gets a chance to reset the company. Maybe healthcare is not going to get spin off now. Maybe some of the parts that were going to be sold make more sense today. So he gets a chance to take a look at the company. That takes several months right there. And then to start implementing his vision takes up to a year. So it's going to be a while. But in the meantime, they can set reasonable financial expectations, and they can meet those expectations, which will give investors and analysts confidence that they know that they're on the right track.
Jim, I think it's only fair to point out that Mr. Flannery did inherit many problems, and he only had a year to do whatever it was that his plan was to do, to turn GE around. So now that we have a new CEO that's coming in, what is the first fire that needs to be put out? What is in order of importance?
First fire, obviously, is power. The forecasts have been terrible over there, and part of the reason that they're going to miss their cash flow guidance for the year is that power continues to weaken. So we need to have some kind of forecasts that we can count on that are going to be met. The second thing would be the balance sheet. There can't be any more write-offs, or if there are, we need to know about them very quickly, because GE today, with this $23 billion write-down, is basically losing half the value of its stockholders' equity today.
Thank you, Jim. That was my question. I can't, Tyler, maybe you can, Courtney, maybe you can. I can't recall a company taking a $23 billion write-down. I mean, that's bigger than the market cap of most companies that exist in the United States. Is this a housekeeping? I mean, literally just getting everything out the door, or really did they just wipe out $23 billion?
Yeah, I mean, it's intangible assets, which is not real cash. But if you look at that $23 billion write-down, it is tied to a real item on the balance sheet, which is stockholders' equity, which is $50 billion at GE, and now it's probably going to be about $23 billion less. So that's real-world implications for something that is not a cash asset.